Great to have all of you here. Very interesting set of attendees and some wonderful panelists here with me. Two of the most learned guys from the technology segment. And we are here to have some very interesting conversations today on how the banking industry and the NBFC sector is empowering itself with multi-digital channel business opportunities. We will focus a lot today on the area of lending, which is the prime business. Let me introduce you to two of our panelists today. May I introduce you to Mr. D Venkatesh, who is from our partner Lentra, and he is authority in the area of lending. He has been working in this field for quite some time now, and he is one of the founders of Lentra. And he will be sharing with us a lot of business possibilities, business opportunities, and the kind of transformation that is happening today in the lending space, especially with the technology, with the analytics, with the various kind of activities that is taking place. And along with him today is Rajesh Krishnia, who is currently heading the BFSI practice at Nutanix. So he has been looking a lot from the technology backend, technology backbone, and how the financial sector is powering themselves with the highest possible uh, levels of efficiency in the technology space. So welcome Rajesh and welcome Mr. Venkatesh. Welcome to this wonderful session, both of you. Lending is one of the primary business of the financial service, banking, as well as the NBFC sector. It has seen a lot of stress in the recent times, thanks to the epidemic situation, or thanks to the low offtake of credit, or thanks to even the NPA positioning. One of the most important things that has been noticed today in this sector is that the amount of input of proposals that are coming to the organization, and finally the kind of proposals that are taken for output are very different, because a lot of the turnaround time itself for each of these proposals are taking a long time, mostly because many of them are not compliant. The risk management teams throws them away, and there is a lot more other problem in processing their information in time. So Venkatesh, since you are an experienced person in this field, what do you suggest as an interesting opportunity for the banks? How they should make sure that they can reduce the amount of turnaround time in these kind of proposals? And what are the opportunities in terms of business strategy as well as technology in this area?
Thanks, Babu. Those are very generous words. Lots has changed in the lending ecosystem. India has adopted eKYC, and with the advent of eKYC and the bureau reports that are here to stay, the platform that existed for over the last 35 years in India, led mainly by the offshoots of Citibank and G Capital, those platforms have seen very little traction. The sources for the loan that has grown by an order of magnitude. That's what's really changed. Traditionally, the loans always grew out of a bank branch. Today, it's at the branch, at the point of sale, via a DSA, or with a merchant, or with an OEM, or through an aggregator. It's gone online through a call center, or some are even experimenting with WhatsApp journeys. So with all these kinds of origination points changing, each channel brings in a different characteristic, and the loan product is dramatically changing. That's what is driving business. So everyone has schemes, and the banks are not able to cope with the business demands because technology is lagging. And where we come in We are empowering the banks to adopt all these new demands that the business is putting in by giving them the right tools.
Interesting. So one way is, of course, you are providing the right set of tools, and technologically, if I may ask you, what are those key technologies that play an important role in helping banks, especially in such kind of times, to offtake their credit and reduce their time to market and to get better businesses? Any suggestions, since it is a multiple channel market?
Data. So the principal piece that has evolved in the last 2 years is the access to data. Data is lying all around. Several banks have adopted our platform, and the one key piece that we do is we collate all the data and leave it to the banker to decide what's good and what's not good. So the product itself is our product itself is called Go No Go, and the Go No Go decision to lend or not to lend decision is taken very rapidly because we help the banks collect all these data points. All the data elements are collated in an extremely nice manner, and we aggregate all of it and let the business rule engine run some scoring algorithm on that, and the scorecards will lead to decisions. And the ability to go and fetch data in real time and from authoritative sources has what is what has changed the landscape. So our whole approach to designing the platform was to allow the banks to uh, do a DDU, do an eKYC, do a multi-bureau check, pull the PAN record, go fetch a hunter record to see if there is fraud or not, and collate all of this, give it to the BRE. The BRE will score all of these things and will give you a decision output. And if required, send it to an underwriter. Otherwise, just take a straight through decision. So that's what we are doing. The platform is enabling the banks to immediately adopt the technology that lies all around in the ecosystem.
Yeah, so ultimately, the data is the game changer, from
Mhm.
whatever I understand from your perspective. And it is this integration of the data, the validation of that data, the kind of play around and analytics you can do with that data, and finally, what kind of services can be offered to that customer is ultimately that makes a role for the player. So since we are talking so much about data, we are talking so much about multiple channels, we are talking about various locations from which this business is solicited. It can be right from the ground, where the agents are soliciting the customers, or it can be from the branches, it can be from the online sources, or from the mobile, or any of the remote channels as well. So when all these kind of sources are soliciting the business, ultimately there is a particular infrastructure or a particular uh, foundation on which this entire thing has to be put up on. And this foundation has to be heavily compliance driven, it has to be completely secure, or it also has to keep performing in its time to time. So as Nutanix, Krishna, if I may ask you, Rajesh, uh, how have you been working with partners like Mr. Venkatesh and Lentra, in order to ensure that there is a constant uptime, faster processing, versatility, and availability of these kind of solutions?
Thank you, Babu. An absolutely right question. And if you really think about it, till a couple of years back, right, all the critical applications, including lending being one, uh, at the bank's environment essentially were running on what we would today call as typical three-tier architectures, right? Where you have separate components which are managed with separate purposes within the bank. There is a compute layer, there is a storage layer where all the data that DB spoke about is stored. There's a separate SAN environment that is there, right? This architecture in today's digital world essentially does not kind of provide the agility that the customers need. And what Nutanix has brought to the table here is a new way of looking at this platform foundation. Uh, Nutanix has pioneered the hyperconverged infrastructure space where the architecture is actually web scale based. It's completely scale out in nature. We converge all the different elements of compute, storage, and network into a single platform where literally platform can be offered a infrastructure as a service to the application. Two key points you mentioned, right? And amongst the other things, right? Availability is extremely key because we are operating in a space where there are banks, and if you in fact add on top of the lending space, right, which is a revenue earner for a bank, it becomes all the more critical. Availability is a very key. And to the point, even what DV shared before, we provide a platform that has availability which is configurable. So you can configure 99 or 4 nines or 5 nines in the platform itself, depending upon what is the requirement of the application itself. And the other piece around availability is the data. As you said, right, today data has become the king. Uh, it's very important as a platform to be able to make that data available to the application. In this case, the go-no-go application that Lentra has at the time when it wants in the format that it wants. And lastly, from a compliance standpoint, extremely critical because the space is highly regulated by RBI. The data at rest has to be encrypted. Nutanix offers native encryption in our platform, which is adding another layer of security when the data is at rest.
So
Thank you, Babu.
great. So you have focused on security, you have focused on availability, you have focused on agility of the data. And today, I think a lot of, the kind of information, especially from taking the customer up to the gate of the organization, many a times have also been let out to the cloud by most of the companies. And a lot of organizations today work in a hybrid atmosphere where up to the gate technologies are deployed in the cloud, and post they becoming customers, post the KYC being done and they converting into customer, the things are taken within the infrastructure of the organization. And when you operate in such a kind of hybrid atmosphere or in a kind of multi-cloud atmosphere, and especially when there are multiple applications running, it is not just the cloud, lending application, but multiple. How do you manage the kind of when it comes to the capability and governance of this kind of technologies that is required to be done on one side? And what kind of cases are there for where customers have to be really careful about when they use this kind of multi-cloud and hybrid atmosphere, especially from security, compliance, and governance perspective?
Perfect. Yeah. So I think the hybrid cloud is the way to go. Like you said, systems of engagement essentially are the ones that typically you will find a lot of banks and NBFCs kind of putting them on the cloud, whereas systems of records traditionally they always have on-prem. Uh, Ultimately, the choice lies with the customer. What makes maximum sense for them? As a platform player, the duty there, the role that we are playing is how can we help the customers in a couple of use cases? Number one, if the customer is looking to take an application from on-prem to the cloud without having to modernize it, right? We must appreciate the fact that a lot of legacy applications customers have are not by default accustomed or built for the cloud itself, right? But at the same time, we don't want to deny the customer like that the ability to run some of the components on the cloud. So first is this mobility. Second, which also plays a very important role in our industry today, is if the customer is looking to build a BCP site on the cloud, they have their core application, the primary instance running on-prem, or maybe they run the near DR and far DR, which is a near DR or a BCP site on the cloud. How can you enable that use case, right? And third, of course, is burst. And for the most classic example of burst use case that we have seen in the last 12 months, essentially, is how do you enable your employees to work from home in a very, very fast way? You may not have the ability to go ahead and deploy additional infrastructures on your data center. So you could potentially go and provision 1,000 users on the cloud while you have another 5,000 running on-prem, and you enable your users to quickly log in, your partners to quickly log in. So these are the 3 or 4 use cases where we are seeing active interest from our customers. The capabilities around security and compliance, right? Whether we talk about micro segmentation, which is providing at a firewall at the layer of the VM itself, which is natively available within our platform. If the customer is going to use our platform on the cloud, it just will take all these capabilities along with it to the cloud. So the security that you have on-prem from a Nutanix platform point of view will actually move with the workload on the cloud. Same is the case with the encryption that I spoke about, right? It's the same encryption, industry-leading capability that we offer on-prem can also be available. I hope I answered your question, Babu.
Yeah, absolutely. So, see, ultimately, the kind of confidence of doing the business on the cloud is very important, because the lending part of the team, the kind of people who are currently joined us on the session, they are more from the business perspective. Unless and until they get the confidence that what they are doing, the business is safe and it is going to be delivered with the right kind of governance and risk strategies. And risk and governance is the first thing that the banker or the lender takes into consideration, because the regulator is the most important customer to be satisfied before you satisfy any other customer. So great. So DV, we are all talking about the oldest business in the banking sector, which is lending. And it has been there for hundreds of years today. I think uh, from ever since the banks were brought into existence. When you look at in one of the conversations that I was having with some of the EDs of banks when we did a CEO conclave, they themselves expressed, you know what, our biggest handicap is, I know that this guy has got money, I mean, need for a loan, and he has the capacity to pay for it, but he doesn't have the paper records to show it, and I cannot lend him. Okay. Now, with the digital lending, with the kind of fintechs coming into the picture, that landscape is slowly changing. Okay, there are various digital lenders of the world who are providing this kind of solutions and empowering more and more people with loan. How do you see, DV, the business landscape transforming? And what are you trying to empower these financial institutions like banks and NBFCs to further transform and take advantage of those untapped markets?
Okay, so you started the example with a person having no papers. So if an individual has no papers, there is very little anyone can do for him. However, if you've lost your records, there is a very easy way of tapping into the authoritative database and then pulling the record on for and on behalf of the individual with permissions. We don't deal with unpermissioned data. There are a lot of fintechs who are scraping screens and doing uh, things along those lines. We strictly believe in authoritative sources of data and with permission. So that limits our scope a little bit, but we enable all the formal banks and retail lenders to do their business with the tools that are really required to aggregate the data, pull the data, enhance the data, and hand it to the BRE, and let the business rule engine give us a good score, and with the score, the decision to lend or not to lend. We have all the tools in the toolbox to make sure that the lender is fully enabled and empowered. Because we gotten into the party so late, we've gone with digital first and mobile first. So that's the approach the platform has to offer. And in the last 2.5 years of our existence, we have gotten a little over 30 customers, 33 at last count. So we've enabled all the banks who work with us with the right set of tools to do their business.
Interesting. So one important thing that has been very evident in the last few months is basically the RBI's regulation on uh, for having early warning systems and early warning signals and things like that, which will reduce the impact of NPAs on the lending system. How do you see this being integrated into the solutions of lending that is already existing in the market, and what kind of opportunities do this uh, provide to provide a better compliance in this system? What kind of experiences can you share in this?
Okay. Our platform has a zero incidence of software and hardware at the customer premises end. We are a SaaS provider, so to that extent, banks who become our customers can get started with almost no latency. So you can get started on day one as soon as the licensing terms are agreed to. And so that's on the go-to-market strategy. Coming to your early warning system, our platform is sewn together in a very, very simple and seamless manner that you can do your campaigns, you can do your originations, hand it to an account opening module, which hands over to a ledger. And the ledger can have a folio with multiple ledgers of the individual having different accounts with the bank. And through the course of the tenure of the loan, we have one module that's called Port View. And that helps the bank to submit the records in a portfolio to a bureau and get a portfolio scrub done. So early warning systems can be implemented in a simple two-pronged approach. One is you review the portfolio you have with the bureau data that's coming in on the whole file. I mean, files could be as big as 100,000 records that you have for, say, one class of product like a two-wheeler or a four-wheeler car loan, or some asset product. I don't really care what it is, or based on a PIN code or a state or something like that. You just submit the whole file, and overnight you get the file back and you can analyze that. That's one way of doing it. By then, your loan's already in progress. At the time of origination, we believe is the best place for you to prevent all early warning systems, or rather an NPA, head into an NPA. So the quality of origination, we believe, is the key to reducing NPAs. And we've been extremely successful in making sure that the data that we collect during the application process is from authoritative sources, is clean, and the data is enhanced, correlated, and presented to the business rule engine in a manner that the decision is invariably correct. So our course correction on the LMS, which is the loan management system, is under 10%. So under 10% of the cases go through a course correction. That means the scoring tweaking. And within that, under 10% has a flaw. So under 1% of the total originations that succeeded in getting a dispersal had a flaw. If you can reduce that 1% by even a tenth, you're heading towards a 10 bips of NPA, or you're surviving on 100 bips of NPA at worst case scenario. So the spread is between 10 bips and 100 bips, one being pessimistic, the other being optimistic. This is on a retail portfolio on an unsecured loan. And that's the quality that we can easily drive given the tools that we have today and the memberships that the banks invariably possess. Memberships meaning membership to the 4 bureaus in operation. Also, if they adopt a new system that's coming up called the NBFC AA, so that will help too. And backed by the fact that there are other multiple sources of data that we can go pick through several ecosystem players that will enrich the data at the time of origination, and we can collect all of that and club it together to form an extremely useful and friendly decision output.
Fantastic. So, if you see these days, the one of the most evident technologies that is making an inroads into anything in the banking and financial sector, very, very strong presence is Open API, which is also helping companies to integrate with various APIs of different service providers to check the data credentials, or for exploring potential for giving newer loans or whatever it is. Now, ultimately integrating all these API or integrating all this channel into a proper structure is one of the most important aspect of any solution that is being deployed. What is your take, DV, on this area? And then I will go to Rajesh also about it, especially from the infrastructure and security perspective. But from your side, what kind of new opportunities are there, and how are you encashing on it, especially for the furnished financial service providers?
That in itself is the opportunity. So the availability of data was just not there just a few years back, because there are so many sets of data that the government wants to sell. And if the MOSPI, which is the statistics department of the Ministry of Statistics and Information, is successful, they are opening up data.gov.in as a data repository of the government, and they want to allow access to anyone who is willing to pay a toll to access the data with permissions. So with so much of data coming in, the traditional lending system was so rigid that it did not allow an ingress and an egress from any point in the workflow. That was the failing of the old system, or that is the failing of many of the banks with the old systems, even today as I speak. So what we did when we started building the platform 3 years ago is we decided that we would go with an API approach and a microservices architecture and allow the bank to decide what they wanted to use. So you can use module by module. You can turn on and turn off whatever you want and what you don't want. And what you want, we will give you in a manner that the machine reads. That means it's cleaned, properly validated and formatted data. And once that is ingested, it's very easy for you to either factor it, multiply it, do some operand or run some operand on it and make sense of what the data is that's coming in. And if you have a whole bunch of those things coming in, you can sort them, find what the central tendency measures are. So mean, median, mode, and then standard deviation from that end. And all of those things can easily be run through a compute mechanism. But the very essence of the new lending or the transformative lending landscape is the ability to connect to systems that are outside your own. So outside of the bank is where the big ecosystem is lying. I'll give you an example. We have a customer called Avance, and they are in the student loan business. One of the agencies that they partnered with is called Byju's, who sponsors our cricket team. So that guy is in the education business. So Avance has a ready API integrated now through our platform with Byju's. Byju's is the originating point where a student picks a course, looks at the big right side of the menu, 2 lakh, oops, what do I do? Click there, and then you automatically get several options. Pick one option and go ahead. So that's the one thing we have done. Reliance JioMart for consumer durables has done the same thing with another large customer of ours. So the person who's buying some white good very easily just says, I want to avail myself of, say, a 12 EMI or an 18 EMI, and it's done. Hindustan Unilever, for example, has merchant invoice and working capital financing through another bank. And all of that starts with their app at their merchant location. And they have a large merchant network. That merchant is not going to move out of the HUL app. It's for us at the back end to just connect the two systems. And the origination is completely digital, no human intervention. This is a paradigm shift for many, many, many banks, that they are not able to see something and the machine is, leading them through a decision process, which is fully automated, which is algorithmically led. So these are the changes that are happening, and we have implemented solutions like this. One extremely interesting API-led framework that is coming in, led by the government of India and the iSpert team, is called OKIN. And this OKIN is going to the Gram Panchayat level. Ultimately, it'll head towards the Gram Panchayat level, and they're tying it in along with the CSCs and the CSC VLE, which is the village level entrepreneur. If that guy wants some invoice to be discounted, that invoice discounting is fed into the system through a loan system provider, loan solution provider, who's called the LSP. Now, we as a TSP, technology service provider, can enable any participating bank to either give some working capital loan or discount it. So it's a factoring service that's fully automated, and the collection of these things is expected to be a staggering number. I'm going to fight shy of giving out those numbers, but it's in the billions. So it's an amazing transformative approach to lending that the government is driving. And when that happens, if you're not with it, you'll lose out. You'll still continue to do what little business you're doing today, but the growth is coming in through the API framework that you spoke about, Babu.
Interesting. And with this fintech and all coming into picture in a big way to increase the lending appetite in the country, there are a lot of neo banks or neo lending institutions also coming. How do you think players like you basically power can look at engaging with those kind of neo lending organization or aggregating the kind of lending that is possible? Do you do any work in that area, DV?
There are two very, very, very big pieces that you merge together. One is a fintech. This is the tech guy who's getting into the finance area. And the other is a tech fin. They have the capital and they have the technology, and they want to lend as a technology-led lending institution. Only one of them is a regulated entity. The tech fin is regulated and the fintech is not regulated. Fintechs, the whole ecosystem we have seen, they do niche products. They pick one solution and they go with that. It's great. Banks love it. We have a simple approach to life. We don't compete with anyone. We have a very collaborative approach to working with everybody. So most of the fintechs, we have a direct integration with. Most of the tech fins, we have a direct integration with. So whoever wants to participate in any of these kinds of fields, we will have either a ready fit, or we will fit, or we will integrate into that kind of an area if it's not known to us. Just to give you an insight, we have in excess of 300 ready integrations out of the box. So the customers who come to us have this feeling that their problem has already been solved, and all they have to do is manage their campaign, manage their brand, and go get the leads, and the lead will then get serviced properly through this, and the origination will just happen. And because the origination has to happen in a manner that the regulator likes and it should stand audit and scrutiny, we've built all of the tools that are required in the perimeter and as paraphernalia normally are all built into the system. And so we give a thali. We don't do an a la carte kind of menu or pricing. We give everything to the customer. What you want, you eat. What you don't want, you just leave it there. So what you want, you turn on. What you don't want, you turn off. It's as simple as that.
That's a very good way of putting things. At least all that is available, you pick and choose what makes sense for you
Yep.
into your business, and you will be built accordingly to
Yep.
that. Great, fantastic. So when you operate in an open API atmosphere, automatically you have tons and tons of APIs coming and hitting into your systems, your infrastructure, and things like that. Rajesh, in those kind of multi API integration environment, the kind of risks, the kind of security challenges, this kind of integration challenges are quite heavy. How do you see those things being handled efficiently without any great difficulty for the financial services customers?
Thank you, Babu. Yeah, I think, there are two parts to it. As a platform, we need to integrate with the applications, right? A lot of our own products are API driven, so we could easily integrate with existing systems of our customers, or should they choose to integrate with an external source. Uh, at our end, I think if you really think about what is it that we are trying to do for our customers and for our partners like Lentra, is to make ourselves as invisible as possible, right? What we want is the focus has to be on the application and on the data that the customer has customer or the partner has got, right? So in that aspect, we are trying to deliver a platform that can run on-prem or on the cloud, a platform that can meet the needs of any kind of data, right? We have today customers storing data in objects format. We have customers who are looking for KYC data to be stored in, say, files format, or it could be in a block format. The important thing for us is to deliver all these data planes as a service to the application, so that when a customer is trying to go ahead and deploy and take advantage of an opportunity that is there in the market, the infrastructure never becomes an impediment to them. On the other hand, the one other area I think we're seeing a lot of traction with our customers is around modernization of their applications. To what DV just shared, right? A lot of customers are looking to build applications which are microservices based, because that then really gives you the power to switch on, switch off modules that you want, you don't want. It's not one big monolithic application. Nutanix platform is allowing that capability to our customers. Should you choose to deploy your applications as a VM, or you want to deploy them as Kubernetes containers, all of that can be done on top of the Nutanix platform. Yeah.
Interesting. So, seeing all these kind of developments that have been happening here, kind of opportunities that are lying. See, because India today even has got still one of the lowest banked populations in the world. Okay,
Yeah.
and still one of the lowest, population which is given credit in the world. Okay, what are the kind of opportunities now you see further for this business, and what kind of technologies you think will make a lot is yet to be seen, which can probably make a difference according to you?
Oh, we see just growth. Growth over the next 10 years is a foregone conclusion. Growth at a slope which is unprecedented for such a long period of time. So we are going to be growing forever and ever as it appears, excepting for these strange things like COVID, and there could be one or two other natural disasters that happen along the way, but nothing is going to come in our way to growing the business, and credit offtake is just going to keep growing. There is an interesting framework that's coming up called Samati, and lots of thought is being put into the consent framework. So Samati is the consent framework. With consent, you have a two-pronged approach to lending. So assets will have the ability to look at the accounts of the person and see the inflows and the outflows. You can net off you can run a simplistic P&L for the individual. Plus, look at the credit bureau data and see if there were any defaults in the last 3 years. So 36-month hindsight and the current foresight, as it were, the current insight into whether you're able to service the loan or not, because the cash flow is just instantaneously computed for you. So that's the interesting big change that is coming up, and that will propel offtake, credit offtake, because the good guys will start getting cheaper rates of interest, and the bad guys can't hide. So it's like that. It's a very binary outlook I have about what's coming up around the corner.
Interesting. So there is only one way forward, that is growth.
Yep.
And if I may ask you, what is the one way forward in technology? What would you say?
Customers are now asking us to have compliance as a routine. So we've seen availability as a given and a routine, data encryption at rest as a given and a routine. Now they want all the auditable reports leading towards 27,001, 27,017, 18, 22301. And if the organization so wishes, a 22316, not many people have done that. But they want all kinds of audit reports and the exhibits thereof for an external auditor to come and peep in out of the box, and in a manner that they can come and inspect. So these are the new trends that are happening, driving PII data security. So that's where we are heading towards. Very similar to GDPR is 27,017 and 18 as a combination, and that's coming in. very, very rapidly, and they're forcing it on us. So there's no escaping we've sustained 3 RBI audits. We are not a regulated entity, but because we are a SaaS provider and hold the data on behalf of banks, we are subject to severe amounts of inspection and controls and implementation of the controls in a manner that helps the banks do their business. But within the domain, we are seeing that the business rule engine adoption and the adoption to automate and digitize end to end is a foregone conclusion now. And almost all the banks are doing away with the paperwork, and they're moving towards a full decisioning mechanism, which is digital, disbursing it digitally. So we've got APIs to fit NEFT, RTGS, UPI, and take the e-mandate through eNACH and keep all the files and a system of records that you referenced earlier in a product that we call internally as FileX, and do reports based on a need to know. So the banker will have a view, the sales guy will have a view, the merchant will have a view, and the individual borrower will have a view. So we've diced the reporting in a manner that gives a view to whoever is wanting to read those things.
Interesting. So that's a very good future lens with which we can see what is going to happen to the lending business and how we can empower more and more organizations to get a larger part of those unbanked or qualified for credit kind of customers into the credit zone. And
Absolutely. Yep.
that is probably the vision with which governments and the banks should be working towards for better economic prosperity of the country. Great. And Rajesh, from your perspective, if I may ask you, I think that basically shows the kind of roadmap to where the lending business can go to and what kind of services can be expected, because ultimately everyone wants to get their services instant. Like HDFC Bank once used to have Chutki Wala loan, where you snap your finger and you get your loan there. Or Muthoot says that go in 2 minutes. I mean, take a 2-minute loan on your gold or whatever it is. So
I'm very happy that you mentioned HDFC Bank and Muthoot. Both of them are on our platform.
Fantastic. The kind of competition in that area is increasing so much. Today, it is not the customer who is scared that whether I would get a loan or not. It is the bank or the financial institution who is scared whether the customer will walk away from me or not. So the tables have reversed today.
Yeah.
And the kind of competition has brought in a lot of interesting aspects to this conversation. So great. I think we have had a wonderful conversation, and we also have a question for you, DV. What are your predictions for the post-COVID world in the context of fintech and especially the lending fintech space? Do you think the pent-up consumption spike will push startups like Lentra towards unforeseen growth spurt? And how are you preparing for that phase?
See, growth, if it happens at an extraordinary rate, is not my concern at all, because that's a function of RAM and it's a function of internet bandwidth. Both of them are very cheap and both of them are available with us. So growth is welcome. Post-COVID world, I stopped predicting. I thought COVID was a 2-month affair when we were shutting down on the 19th of March 2020. I thought we would be back on the 3rd or 4th of May. I'm so wrong that I've stopped predicting what will happen post-COVID world. But looking at the old pandemics that have hit several parts of the world in history, nothing lasts more than 1 or 2 years. So ultimately, business has to come back, and there is going to be strong growth because there are 2 or 3 extremely interesting pointers for India, and that's the median age is below 30, and the economy itself is growing strongly. So if we have to find a place in this world, this whole big mass will start coming up, and the per capita income in dollar terms will keep going up. So if that happens the next 10 years, it's completely party time for everybody in the lending business, because the growth is going to come immediately, and it will sustain itself. And there is room for everybody. It's not like even one will get swept aside. There are going to be market spaces for every kind of lender and every kind of fintech to survive.
Fantastic. I think the spurt of retail, the retail loans, especially the e-tail loans, that has also added a wonderful market dimension. And of course, the education loans are also taking up a new space now in a different paradigm altogether. And all this is nothing but going to add more and more. And the availability of social data, availability of data online is adding more teeth to the lenders as well to make sure that the loans are lent on the to the right people. I think we are done with all the questions. I think despite such developments on high applications, how do you see human intervention in credit underwriting and lending business? This is that question from Rajan Bansal. This is the last question that we can take before we wind up for the day.
Okay, in certain loan types, in certain loan flows, uh, underwriting is a must. Like loan against property, the CAM summary is definitely seen, and underwriting checks will happen manually. There are a class of products like two-wheeler loans and south of that, consumer durables especially, where we have automated to an extent where STP rates are in excess of 96%. So there is no human intervention in those kinds of low-hanging or low-value loans, where the median value that's getting disbursed is south of 30,000 rupees, which means you need about 300 such successful applications to even hit a crore of book value. So it depends on what type of loan it is, but the extreme case that I cited of 96% straight-through processing is consumer durable point of sale type of loan versus a loan against property, which is a high value loan, and typically uh, for a small business that is proprietor led or individual set of individuals led. Those things will take the course of having the underwriter look at the screen and then do things manually. In both the cases, we have an underwriting cockpit which summarizes everything in an extremely nice manner, and that gives you a decisioning ability on all the variations only. Everything else which is green ticked is already green flagged, and then the presentation layer is much superior to what it used to be.
Interesting. We have had a very good conversation on the business directions of lending, on the technology direction of lending, on the infrastructure direction of lending, and overall, what is the kind of potential that we are going to have in this entire business moving forward from today. So, we see a lot of business potential from the technology services perspective, from the infrastructure perspective, and from the business perspective for all these organizations. And the fintechs have only added more feathers to this particular business by bringing in more and more possibilities into it. And we see a lot more newer directions. Thank you very much, DV, for sharing some wonderful insights into this business aspect, and Rajesh for sharing some beautiful technology perspectives and future possibilities into it. And to the audience, thank you very much for being a wonderful audience and asking some good questions in this area. And we look forward to more such very interesting conversations with all of you working with us. Thank you very much.
Thank
Thank
you.
you very much.
Good day. Bye.
Thank you.